this is Claire, and today, after so many launches that have just passed the past quarter, I just want to understand a little bit about where we are headed into 2026. If today you had maybe tried to ballot for a unit at one of the launches, the previous launches at Zion Grand, Penrith, Sky Holland is one, and you may not have gotten a good queue number, so you didn't proceed with a unit. These are the things that you want to look out for going to 2026, so you understand a little bit about where prices are going today and going to 2026. Since the launches are kind of over already, the new launches that you'll be seeing will be looking at something into the next year already. So after this video, I will also be filming one that has some of recommendations in the under 3 mil range that you can look at, a 2.1 million range from a 2.6, 2.8, and also a 3 million range. What can you possibly look at into this market so that maybe you don't have to really look into next year's properties because prices will be slightly different already. So let me explain a little bit on this as well. So going to 2026, there are a couple of factors that you want to understand, right? So you want to know what is the landscape today and across the whole of this half of 2025. We want to know what are the macro factors affecting your demand and supply, what are the more micro factors that you want to look at as well, and then where do we go from here, looking at the options that you might have if you're out there shopping for something in the market today. So just understanding the landscape a little bit, when we look at CCR properties, that means your River Valley ones, including Zion Grand, Promenade Peak and all that, we see that actually the CCR to the RCR gap has narrowed quite a bit to about 15%. Today you can get something in the less than $3,000 PSF range in the CCR region, while in the RCR region it has already hit about $2.7, almost $2.8 per square foot. So traditionally we always see the CCR properties slightly feels a little bit more unattainable because the prices are always on the higher side. But now that the gap has narrowed, there is a big opportunity in the CCR region for you to be able to enter. Also considering other factors like next year our land brick prices are quite high, so in the Far East and Far West, even at Trung Grove, the prices are going to hit what CCR is selling today. Between new and resale, sometimes we always want to take a look at what are the options out there for us to be able to see whether we want to buy a new property or a resale property. Right now what we're seeing is that some of the properties out there, only some of them, the gap between the new and the resale is very narrow, and that poses as a good opportunity for you to buy a harmonized project at the same per square foot or slightly higher per square foot than a resale property. And that's also because the resale properties have hit some sort of a peak since the start of 2024. That is also why there is such a good take-up rate for newer properties, because they are also seeing the fact that the gap is very narrow. Third point is that resale prices are actually quite high right now. It's actually hovering, or some of them are even kind of dropping a little bit in terms of the transactions. If let's say there is a lot of supply in the market selling at the moment, but because the demand is kind of skewed towards the new properties today because of its price point, the resale properties, some of them are already hovering, and some of them might have even let go of the property at a lower price. And another fourth point is that the interest is dropping. I think we also had a news announcement that the Feds are going to lower the rates even more. So in terms of the kind of like looking at investment value, if you talk about putting some money in your fixed deposits, right, versus going into safer asset today that can potentially give you some gains, looking at depending on which product you're looking at, this is something that you want to understand, also thinking about where you want to put your money in. So the macro factors, population is one. Whenever we see where Singapore wants to plan its population growth, we see that every single year on year, we do see some growth in terms of population. But what we don't see actually is things like PR approvals, things like citizenship approvals. So there are about 30 to 35,000 PR approvals each year. So today, if a foreigner comes in and starts working here, right, they will not be able to buy a residential property because the ABSD slap on them is about 60%. So that's quite heavy. But once you hit a PR status where you get a PR approval, and that is 30 to 35 PR approvals each year, they can easily enter at about 5% ABSD, right? So in terms of that growth, in terms of the citizenship, number of citizens, another 200,000, number of PR approvals that have been done, we always see that actually there is the demand side of things. There will be demand coming in from the citizenship point of view for the PR approvals, where people are entering the HDBs as well after 3 years of approval, or people who want to enter in the private property trade and just own an asset, because we know that the price have gone up quite a bit over the past few years and they want to sit on something safer. So from the demand side of things, we do see that actually there is going to be more and more people coming in. If you're buying something, if you're a Singaporean buying this for investment as well, we know that with the foreigner input in and the expats, the family offices coming in, the rental demand should be quite strong, but it really depends on the area as well. Now we see HDB upgraders, right, kind of pushing the demand for private properties and upgrading. We do see that in the next couple of years, we have a huge supply of people coming in to potentially sell their HDB flats and also exit to buy a private property, right? So in this case, there is estimated a 43,000 supplies to help 2029 private property owners when they want to exit. So today, if you had gotten a new launch, let's say Sky Holland, let's say it's Penrith or Zion Grand, you may want to exit in the 2029 range, right? So in this case, 2029. But the years before, you see that actually there is a 43k supply of people who might want to exit, right? If you talk about maybe 20-30% of them who want to exit, that's almost 10k households who want to the HDB and also also come into private. So that will support your prices at the end. So I'm talking about demand side factors, right? And then later we talk about a little bit about the supply factors. The other thing is interest rates. So today what we're seeing is that the past 3 cycles of interest rate hikes, every time the interest rate drops, the demand comes back up and then the prices go up also. So you see this in the entire cycle since the a few crises that we have been through, right? Since this one has, so the more recent ones would be during the COVID period, right? You see interest rates drop, but the people who enter at where the interest rates are dropping benefit the most in terms of the price growth. So in this case, what we are seeing is interest rates is dropping again, and there is some form of price support coming in that will be able to help you drive your prices forward. So if you ask me, is there a good time to buy? I would think now will be a very critical time for you to buy, but at the same time, we need to know that the entry price that you're entering is safe, so that in terms of the buffer where you are at, you want to be able to enter somewhere here where your price growth will be a bit more significant and more rewarding for you as well. The more important thing here is that we do see that the land bids coming up, the projects that are launching next year, do signal some higher prices next year. So Sim Lim plays a bullish bid on the Holland Link side. This is not near MRT. It's going to be 99 years. It's going to be a drive. It's kind of in between 6th Avenue and Holland, and it's at 1432 per square foot, and this is 22% higher. So what Sim Lim is doing is, right now you see that they have many successful launches. So Emerald of Katong is one, Oriole of Tampines is a EC as well, and if you look at their build progress, it's actually quite fast. So what they're doing is they want to build as fast as possible so that they can take the money and go and build their land bank somewhere else, right? Also at the same time, their reputation and be able to earn enough profit margin for that. So I think Sim Lim, CDL, Guaco, they are a bit more active in terms of their build progress, and that will in turn help also because when they bid for other lands, they will be able to have the cash to go and do it. Okay, so that's Sim Lim. We also see that for the Daniel Road side, right, there are a total of 9 bidders in total. So what we can see here is also that developers are quite hungry for the land, right? So we see CDL, we see CSC bidding for land. Sim Lim also went in to bid for the land. Dorset Road, which is near Outram Park MRT, also has 9 bidders in total, and the pricing is as such, right? So 1,004, 1,004. If you just compare, let's say Sky Holland is at 1,285 per square foot PPR, Zion Grand is at 1,002 as well, 1,202, and now it's $200 more. So when it's $200 more, it really shows that the developer will need to be able to want to keep the same profit margin but need to price even higher. So coming to next year, we see that all the bids that we see going in a little bit higher. Even the Bayshore plot will be likely launching at 2728 starting from, and then maybe the Seaview units will hit about 29. So today coming in 29 per square foot in the CCR region actually sounds quite cheap. Just going to next year, you will be able to see that actually the prices will scale towards higher ones next year, because even your RCR region and your OCR region will be selling at today's CCR pricing. So today we see Zion Grand at land bid at 1,002. They sold at about 3,000 per square foot. The Promenade Peak 1,003. They sold about 3,300 per square foot. Penrith at 1,001, 2,008 per square foot. So if Penrith at 1,001 and 2,008 per square foot on average, if you talk about Bayshore Far East project, going to be likely on average about 3,000 per square foot as well. So there is a chance that these prices will hit about 3,000 as well, 3,001 for this kind of OCR region. So that part alone is a little bit scary going into next year. That's why today, if you can find something in the $2,004 to $2,008 per square foot range in the RCR region, I think is a really good deal to enter, because going to next year, when these prices launch at about 2007, 2008, the ones that are remaining stock in the RCR or CCR region will not remain cheap. So now we talk a little bit about supply in the market. The reason why the government has put in a 4 years SSD period for us, right, is because we look at the supply coming in 2026, 2027, 2028 and beyond. We want to be able to moderate the number of supply at a healthy level in this range so that the prices are go moderate upwards as well. What happened in 2013 to 2016, there is a point of stagnation in terms of the prices, if you realize, is because there's a huge supply of completed projects in this period of time. When there's a huge supply and there's not enough demand to kind of meet the supply, then that's where your prices will stagnate a little bit, which is what you see in the 2013 all the way to 2016 range. Whether you are sitting on a private property or you're sitting on a HDB flat, it's around the same kind of prices that you see. There was a point of stagnation at that point of time. So what the government is trying to do is moderate the supply of completed projects over here to a healthy level like this, so that we have a moderate price growth at the same time. When there's a moderate price growth, there is going to be confidence in the market. Yes, in terms of affordability, you still can be able to get something. And two, when you are a private owner yourself, you will see the prices moderately going upwards in a healthy range, so that your future buyers will still be able to afford and enter. So this is what the government is doing, and I think it's fair that they're doing this so that we know whether your project is going to TOP in 2028, whether it's going to be 2029, 30, it's going to be a moderate supply coming into the market so that the demand can match up with it and the prices grow moderately as well. So I've covered a little bit of the demand factors in terms of population, in terms of interest rates, and also where the HDB upgraders are flooding into the market to maybe enter into a resale private property, and where the supply is going as well in terms of government coming in to moderate the supply in the market. So when we talk about market forces, we always talk about demand and supply, right? When it comes to these two things, we want to also understand understand that what the government is trying to do is to moderate the prices, but also at the same time keep it stable. And if you realize across the past 15 years or 16 years or so, we see that there is some form of stagnation in the prices, but that's also because of the overall supply of the market. But whether we are very affected by economic factors, I think we are, but we see that over the years, the prices also hold steady across the different interest rates. So if you look at the interest rate chart over here again, what we see is when interest rates drop, prices go up. So when the interest rate is high, we see that the prices are moderate over on this side. At the same time, there's good demand coming in. So since the interest rates have dropped right now, we are potentially looking at prices going upward. At the same time, it's also supported by the land bids. The developers are very confident in bringing in demand for the land at the kind of margins that they want as well. So if you ask me if prices are going to drop, going to be a bubble or not, all the data here is going to show you it's going to be a little hard for it to drop, but I feel that a healthy moderation in terms of the price increase will be good for economy overall, and also for you to be able to exit a healthy profit. I think that's the most important. So in my next video, I'll be sharing a little bit about for a particular budget in the post-launch phase. That means project has already launched. There are some remaining units that I feel that there are value buys today. I'll share them in my next video. I'll link it up in the description box as well. And if you have any more other questions about where the prices are going and going to 2026, what you should look out for, or should you let go of property now, is this the best time, or should you be looking at something going to next year? So this is my contact number. If you would like to WhatsApp me directly, you can just pause this video, scan this QR code and WhatsApp me directly if you have any questions, and I will see you in the next one.